The Bank of Canada kept its main interest rate on hold. I'm joined today by Sal Guatieri from BMO. Sal, what are your thoughts on the comments made, and how long do you see rates staying on hold?
Well, the comments, for the most part, are in line with expectations. The one wrinkle, though, is that the bank seems to be a little more worried about financial stability risks. And that is, we're seeing an acceleration in house prices in a few major cities in Canada. Consumer spending remains strong, and the sense is that record low interest rates are driving spending and housing markets. So this is the first time I can remember that the bank has actually mentioned financial stability risks related to the very low interest rate environment. So it does raise the possibility that the bank might see the need to raise interest rates before it would like to raise interest rates if we see, say, an acceleration in house prices in other regions in Canada, outside of Toronto, Vancouver, and Calgary, or if consumer loan growth picks up. So that's the one interesting thing. Now, the bank did kind of temper that sentiment with a sense that underlying inflation remains muted or low, and that the economy will still operate with some slack for at least another couple of years.
The loonie dollar fell on the back of disappointing retail sales. Sal, what was the main reason for the poor results, and what is your short-term forecast for the Canadian dollar?
Well, the Canadian dollar did weaken a bit after the retail sales report. It came in softer than expected, falling in August. But that did follow a string of solid gains in prior months. We have two straight declines in retail sales, but again, we saw a huge increase in June, for example, and in previous months. So it still looks like consumers are spending at a pretty healthy rate in Canada. Now, the Canadian dollar weakened after that report, but it seems to have recovered its losses after the Bank of Canada's policy statement. Again, possibly reflecting a risk of a sooner rate increase from the Bank of Canada because of increasing financial stability risk. Now, we still think the Bank of Canada is on hold for another year, probably until October of next year. But again, we will have to keep a close eye on house prices in Canada, consumer borrowing trends as well.
Sal, is there anything else you think is worth mentioning today?
Well, there are no other key economic reports this week for Canada. It looks like our economy is on track for just over 2% growth in the third quarter, so that is a slowing from the previous quarter's pace of 3.1%, but it's not bad growth, and we expect some pickup in the current quarter in Q4 to about 2.5%. So we're not too worried about Canada's economic outlook. We are seeing a nice rebound in exports, and manufacturing activity is generally strengthening. And we still have a fairly healthy housing market and healthy trends in consumer spending. So we're not too worried about the consumer backdrop. Just getting back to our view on the Canadian dollar, even though it has strengthened a little bit after the monetary policy report, we do see the Canadian dollar weakening further because, again, we think the Bank of Canada will be on the sidelines a bit longer than the Federal Reserve, and that will likely weigh on the currency for some time.
Sal, thank you very much for your time today. I really appreciate it. Well, viewers, do stay tuned. We have plenty more economic updates heading your way. See you very soon.